All right, team, what's up? Traders War Room here. I'm Chuck. Today we're going to do a weekend tech video. It's starting at 1400, 2 p.m. Central Standard Time. We're going to go ahead and get started. Other people will come in, but I'm also going to put this on YouTube as well. And this is free, guys. So all I ask is that you allow me to do my intro, and then we get onto it, and you guys can watch the video as a reference tool when I put it on YouTube. So without further ado, let's go ahead and get started. Want to remind everybody, this is not financial advice. The content's for entertainment and education purposes only. You're responsible for every decision you make. We want you to have fun, use caution, and always go to war. Check out traderswarroom.com, the true one-stop shop website, man. We got tons of products and services right there at your fingertips. Check us out today. Truly something for everyone and every type of budget. Like I said, free and paid services. We got the Traders War Room Discord, man. It's amazing atmosphere over there. You guys really need to check it out. We got a free 5-day trial with Premium 2.0. Here's some of our services. We got the machine learning algorithms over there. We got daily live trading bell to bell, 20 plus professional analysts that do all sorts of real-time alerts. I mean, it goes on and on and on. We got one-on-one mentoring classes, you name it, we got it. TWR classes, we want you to check out our upcoming and historical repository. Truly something for everybody. Every battle needs a plan. We want you to build your plan with Traders War Room. We got that one-on-one mentoring, guys. Refine your skills, develop a strategy, gain confidence in your trading. You can book your session at traderswarroom.com. We got that AI bot we were talking about earlier, guys. This thing is truly amazing. And the cool thing about it is, unlike other algorithms that are out there, it works on any platform. I don't care. You use Robinhood, we got you. You use Webull, we got you. TradingView, TOS, you name it. The bot works right with any platform. It takes charts that I'm about to show you. It calculates it through histories. And guys, we just added a repository history back to 1985, okay? So we're taking all that data from the stock market, and the Terminator automatically calculates it. It takes charts that look like this, messy, lots of data, but man, messy and confusing, guys. It has tons of data, but it's busy, especially for you young, new investors. And it takes it, it processes it through 2 years. I need to update this because now we got more than 2 years of back testing data, and it gives out a clean alert that looks like those, man. Look how clean that is. Tickers, the time, the underlying assets, so that you can utilize it not only on options, but with stocks as well. That's the key part. Any platform, it works with stocks and options. It will destroy the marketplace, and you is the marketplace. It's going to destroy it. And so why the Traders War Room Algobot? Works on all platforms. You don't have to run a code. It works on stocks and options. You don't have to search for the stocks. It does it for you. And it works on your computer or your phone, your choice. And we got some exciting new additions. You guys asked for things. We heard you and we added them. So check it out. We got a new algorithm bot on Traders War Room. We got some upcoming classes, and we got the future trade signal bot. You guys were talking about futures trading. We got you covered on that. So the new algo bot trades off the SPX. It uses the 20 years of data and works on any platform, just like the other one. Same thing, just it goes specifically off of the SPX. You can trade it with SPY, you can trade it with QQQ, you can trade it with Tesla, Apple, Microsoft, any of those big juggernaut companies. You can trade it right off the SPX. We also got classes coming in May. We took a little downtrend on April because we were putting out classes like every weekend, guys. We need a little break. But coming in May, we're coming out swinging. Supply and demand class, how to trade futures, and trading divergence. We got you guys covered. And we got the futures trading bot. This thing is the hottest trending thing going. A lot of people are getting interested in futures trading, and we got a subject matter expert on there that's going to push out great alerts and great information. So, guys, all I got to say is, what are you waiting for? We truly got something for everyone. We want you to come join the team. Invest in yourself in 2022. Do it with Traders War Room, and check us out on traderswarroom.com. With that said, we want to thank you. Let's get into it, guys. We're going to go ahead and share a little motivator real fast to get you guys excited, and then we're going to crack it out. Who's ready to go to war? Let's crank it out. Guys, we're talking about entrance and exit points today. And so basically, when we're thinking about entrance and exit points, we need to think about when do I want to buy into this stock and when do I want to exit this particular stock. Now, this will train depending on your trading personality, whether you're a day trader, whether you're a swing trader, whether you're a long position, also whether you trade stocks or whether you trade options, so on and so forth. But we use a basic scanner. And if you guys aren't using a scanner, I got a free scanner video on YouTube. Check it out. And I'll also, when I spin this up on YouTube, I'll tag it during this part of the video, so you guys can check that out. And scanners give us options, okay, based off of criteria and things of that nature. I use this basic one, the hottest ones, okay, because the hottest one, it's already a free scanner that's built into Webull, and I like it because it gives you all the stocks that we're paying attention to: Apple, ABNB, Adobe, Affirm, all these tickers right here. These are the ones that we're talking about, guys. Why? Because they're the ones that have the volume. They're the ones that are moving. A lot of them are just speculative ones, and these are the ones we're trading. So with that, let's go ahead and get into Apple, and let's talk about entrance and exit points, okay? So we're looking at Apple, and always, as with everything, consistency pays over time. So you got to have a consistent way of when you start looking at a stock chart, okay? And I always use a bird's eye view approach first, the day, okay? You got to look at the day, and you got to start looking at some levels, okay? So you go out, you kind of look at the lay of the land, okay? As you know, Apple's a juggernaut. I mean, we got a consistent uptrend. Here lately, we kind of got a little downtrend, but it gives us some levels, right? From the last breakout, where we kind of broke out and we started really seeing those highs, those 180s, and it came back down. It's consistent with our little pattern that we kind of see here, this sideways movement between a high level resistance point and a low level resistance point. Now, the question, so we see that levels, right? And we can look at that on the chart and we can decide, okay, here's the high point, all right? This is probably a point where we're going to have a lot of resistance because it's gone up there a couple times, as we see, and it's rejected, right? Up there a couple times, rejected, and finally comes down, finding a support level. And then again, just like with the resistance, the support's getting rejected as well. So this is low, gets rejected, drops down a little bit, but as soon as it drops down, we notice just a couple days later, boom, 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 right back up. Now, it looks like we're headed back down. So everyone should be thinking about, okay, if Apple's a particular stock that I'm interested in, and that's number one, is like, is the stock something I'm interested in? Number two, is this something that's in my price range and I can afford? And where do I make my entrance and how do I decide to get into the stock? Well, we kind of look at these, right? And these are price action, okay? The candlesticks, and this is price action. So we got to develop a strategy for getting in, okay? And one of the strategies I like to use is I like to use the 9 moving average, okay? And why I like the 9 moving average? Well, the 9 moving average, as you look at it, it's basically showing us momentum, all right? A momentum chart. And we want to trade it into the momentum of the direction the stock is going. And right now you can kind of see when we hit this peak and the high, we were on the momentum side, on the uptrend side of the 9 EMA. We kind of dipped down, momentum slipped a little bit, and then we kept going up. So these are the areas where if we're bullish on it, we want to trade into momentum on the upside of a moving average. Conversely, right, it started downtrending, and we're starting to see the closing coming down on the downtrend of this as well, okay? So we're seeing the momentum to the downside again, closing above it on the upside. Now here's kind of where it's making a decision. It's tight, it's consolidating a little bit, and then we start downtrending again, uptrending, and now we're downtrending. We're again into a tight area. So it's kind of making a decision. However, we're starting to get down here. So this comes to where we want to try to make a decision to get into Apple. And we have to decide whether we're a day trading Apple, whether we're trying to swing Apple, or whether we want to start establishing a position in Apple. And that is, unfortunately, I can't tell you what type of trading personality you have. That's up to you. But I like to swing Apple and I like to buy shares. So for me, this right here, this 161 area, this is attractive for dollar cost averaging into shares. So anything 161 or below, I'm loving it, right? For my long-term shares. I'm not necessarily loving this lower price for call options, because especially if I got a 170 call option on, Apple that expires, say on what's our expiration coming up to on the 29th of April, I'm not enjoying that, right? I'm not enjoying the 170 because we got $10 of movement going there. We're probably losing money on that particular trade. But if I'm an investor on this, I'm loving this. So I'm liking any type of entrance or positions into this particular stock anywhere in between this level and this level. Okay, obviously I would like long positions here. And we noticed that this was our level from the last where we had support. I'm loving positions down here because if history repeats itself, we're likely to bounce from this level if we come back down and test it and seen it. So I like positions long here. Now, if I'm going just strictly off the chart, we have to wait until tomorrow, or excuse me, Monday, to really get a defined direction on this particular thing. If we close below this 9 moving average, the likelihood of us seeing some more downtrending pressure over a period of, say, a week or 2 weeks is highly likely. Now, will it spike back up? Yeah, Apple likes to move. You know, we can see Apple moving 170, 165, $5 movement here, kind of tight here, but between $5 and $7 movement in Apple on a daily. Right here, you know, closing out the market on Friday, 166. 162. So again, we had that $4 movement. So I'd say between $4 and $8 for a movement to consider our entry point would be something that we need to consider on an Apple trade. So we watch what it does in pre-market and we see how it reacts. And then when the bell rings, we kind of make a decision and we decide, okay, so if Apple closes below, you know, and we pick a level that has some decent, you know, some decent volume and some decent levels. And we like this level here. We like these levels here. This level's hit a couple times with some decent volume. So, you know, we'll say 160, right? 160 is a good kind of psychological edge. I usually like to go with just a little bit because 160 is a psychological number. You know, people enjoy multiples of zeros, 5s and 10s and stuff like that. That's just human nature. So I would even go just a little bit below there and kind of call it like, you know, 159.75 or, you know, 159.50. Give yourself a little buffer room, right? If we start to close fully below that, when we open on the market on Monday, then we should start, a light bulb should go off in our heads and we should start thinking, okay, we got some downward pressure and we do have about, you know, $4 to $5 that we can go to the downside. Remember, we said Apple trades usually between $4 and $8 on a given time, right? That's about average. So if we close and we set our little limit, and you know, if we're a chartist, we're putting little things on a chart, you know, little lines to kind of give us guide points. You know, so we got 59.43, something like that. We like that because we got a lot of volume. It touches it multiple times, you know, touches here, touches there. It trades in this level multiple times before it took off, but we're kind of heading back down. So this would be a good level to consider. If we close at and below this, the likelihood of us going from here to here is highly probable because it's within that $4 movement of normal ability that Apple likes to do. And so we would probably think about entering here and setting our mental exit point at least to consider exiting around this level, because this seems to be the level where it doesn't like to stay too long and we would be expecting a bounce. So quite shortly, that's kind of an idea of going through an entry and an exit point, specifically if you're looking off the day chart for potential swing trades, okay? Because it may not get down there in that day. It might come out the gate on Monday, but going off the chart, if we start closing below this 9 EMA, we're probably looking at some downward pressure to the downside. All right, let's talk about a bull case, okay? So something comes out, say tomorrow, Apple comes out with a bullish report. Apple likes to move off of bullish reports and sentiment in the excuse me, in the news and stuff. And actually, we're going to go ahead and use a different one because I want you guys not to just think this stuff works with Apple, okay? It doesn't work. We're just going to pick a random one. I'm going to go ahead and just come down here. Mara, all right? Okay, Mara. Actually, I don't like that one. Let's not go with Mara. Let's go with KO, okay? KO, okay, Coca-Cola. All right, we know that Coca-Cola, we go into kind of some understanding with Coca-Cola, right? It's a consumer staple, all right? It's embedded into the US economy. It's a world brand, we know that. But it is something that is considered a consumer staple because Coca-Cola is so embedded into the economy as far as the products and services. So we do like it, especially during inflation, right? But where do we enter into Coca-Cola? Again, bird's eye view. We're going off the daily. We got to set some ideas for it. Notice we're above the 9 EMA, and we've been above the 9 EMA for a while. Okay, and you notice I like Coca-Cola, so I've done some charting on it already, but we've been above it. However, you know, Friday was a rough day in the marketplace, and we know that it was rough in the marketplace. We even spiked up on the Thursday, but we couldn't hold those levels, and we started closing. Then Friday came with a nice sell-off. So the likelihood, if we go back on history from previous runs on Coca-Cola where it runs up and then it cools down, we're probably looking at some downward pressure, especially since it's coming down towards the 9 EMA. I would expect this to probably close down here. But since Coca-Cola is running between 66, you know, 65, so we got a $1.50 type of movement and stuff with a 67 type of high, we could definitely see a bounce here because it's been trending above this 9 EMA for a while. So if we had an entrance, we would put our target zone here, right? We expect $65, something like, what is it, 65.25? We go ahead and say $65 for our low target point. This would be something we'd consider to get in during puts on a low target point, all right? Now, we got a bull case, okay? We want a bull case. Coca-Cola did their thing and they started spiking up and we come up. We noticed we got a tippy-tip here on Friday of about 66.34. So we want to go ahead and go a little bit further up than that, being conservative because we don't want to get caught in a bull trap, right? You know, 66.56, but let's even go like 66, you know, 66, 82, fine, 78. I wanted 75, but I can't get it exactly on there, right? So we go ahead and we're going to come up here. There we go. 73 is pretty close. We're going to go ahead and put our bull case line. So Coca-Cola is real close to the 9 moving average, still above it. We got our put case in case it decides to come down. We know that Coca-Cola doesn't like to hang down here recently very, very long. So if it comes down, we're probably looking for a bounce. This would be one of our bounce categories coming off the put, 64.61, something like that, 64.17. You know, we would be expecting a bounce. But if we shot out from the gate and we closed above 66.73 is our target. Remember, this is, you know, eye of the beholder type stuff, okay? We're all going to be different on our levels that we're trying to decide. But for me, if we opened and we started closing above 66.73 on, say, a 5-minute chart, I would consider that probably a pretty good bull case for some continued pressure, possibly looking to break out since we're already moving in a positive direction. That would be one of the things I'd be looking for an entrance on a bull case on this one. Coming from the downside, I'm not really looking at these closer levels for a bull entrance because I don't think that this, if it closes or, you know, close to this level it's been previously, I don't like it for long entries. It doesn't give me the confirmation I'm looking for. I want some defined confirmation, and that's one of the key points of entrances and exit points, defined confirmation of a direction. We want defined confirmation. Closing above this point gives us that confirmation of moving to the upside. So that's what we're looking for with entrances going on either the put side or the call side. Now, let's go ahead and pick another ticker here. PayPal. Go ahead and pick PayPal. Now we're in the trade, right? All right. This is where we're going on the 5-minute chart or, you know, whatever chart you like. I like the 5-minute chart because it gives us, takes away some of the noise that we have associated with trading. Because if you go on the 1-minute chart, you know, if you notice, there's just a whole bunch of trading going on here. And it's a lot of noise, all right? Especially for traders that can't focus on the marketplace all the time. This is a lot of price action going on. Using the 5-minute takes us away from that noise and we can focus a little bit better on what's going on. So we're going to use PayPal and we're talking about the entrances and exit points. So going off the previous day, obviously this was Friday. We can't, you know, we're not clairvoyant. We can't see the future. But going off the previous day, what could have been our points for entrance into PayPal? So let's go ahead and look at the chart. We're back at the daily chart here, right? Here's Friday. Here's Thursday. Based off of Thursday, we could have looked for potential movements. Remember, we're here, we got some space underneath the 9 moving average, so we're definitely on the downtrend. So we got to be thinking of a bear case, but we're looking for some movement and stuff. So, we go a little bit top, maybe even right on the 9 moving average, seeing if we had, this would be our bull case where we'd be thinking calls for a reversal on PayPal. And this would be our bear case, right? 89.76, something like that, okay? Then we go back into our, now we're trading this, right? We're trading this on Friday. That was Thursday, we're trading this Friday, and we're looking for our levels. All right, and we notice we open here, and it starts to kind of do its thing on the 9 moving average, and we don't have defined entry or exit off the 9 moving average. We're right on the line still, right on the line. We're not closing above solidly. We're not closing below solidly. Now we do have a spike here. This is what gets a lot of people, okay? They start to see the volume right there, and they think, oh my God, PayPal to the moon. Yes, I'm in. And then boom, they get caught with a reversal, and it starts to dump, and their calls start to be worthless, and they start yelling at the computer and whatever, and it just is not a happy day for the person that invests in this particular PayPal. But we could have warned ourselves on that type of entry because we did not close fully above our moving average, which is one of our criterias, right? Remember, all criterias are different for every person. This is just one way to sharpen your knives and get you ready for attack, okay? But for me, we didn't close above the 9 EMA, or excuse me, the 9 moving average. That's criteria from, we got to close above it fully on a 5-minute chart at least. And as you see, we started reversing, and then right here, boom, this is where I'm starting to think, okay? You got to be thinking, light bulb. All right, we're going to the downside. We closed fully below it. This is entrance points, guys. This is where we're like, all right, we're moving down, we're closing, we close below, we're starting to get our distance and our gap away from a 9 EMA. This is our movement to the downside. This is entrance zone, and then we got to be able to watch our exits. And say we weren't even able to watch our exits, that's fine. If we got the sentiment, we know that the market was extremely bearish, we could probably ride this one out, but we could have had a good trade to the downside with an entrance point. Now, when do we want to exit? We already talked about entrance points. We understand we want to enter when we show difference off of the moving average to the downside or to the upside. This one's not going to the upside, so we're entering in a bear trade here. When do we want to exit? Well, we want to exit, guys, when we start to consolidate tight again. We got our space from the moving average, right? We want to exit when we start consolidating tight. This is chop here. This is chop, right? But we're still staying below the 9 moving average. We're still staying below it. We're not going above it to where we're starting to think, okay, we're starting to reverse. We're staying tight. We're staying tight, still below. Now, here's where we want to start thinking about exiting. This is tight consolidation, okay? This is not as chop, okay? This is chop here. Chop, 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 right? This is tight. This is where we need to start considering our exit point. And on this particular trade, say we would have got into something here, let's be conservative. We didn't catch it here, but we caught it here, 88.62. This would be where we want to trade and consider getting out. Now, yes, did it go down? Absolutely went down, but you guys know as well as I do, once you make a decision, consistency is what pays. You guys just have to be okay with making money when money's present. Now, if you would have swung this, yeah, absolutely. The likelihood of you making some money coming on a Monday from swinging this over the weekend, absolutely. Great job there. However, on this particular example, we made a decision to get into PayPal at trigger levels off of the Thursday. And so we're making the decision to make money. We want to go into the weekend with a great trade, made some money, and we could have done just that. And look right here, 86.52, 88.56, a $2 movement, especially on option contracts. That is money all day, every day. And all we had to do was pay attention to moving averages and sentiment following overall marketplace. All right. That is how we're making entrance and exit points into our trades. And that's a real just one tool for your toolbox. But I want you guys to understand that if you're not using at least some sort of overlay on your main chart, for getting into things. You're just going off of alerts and you're just going off of price action and volume stuff. You're doing yourself a disservice. Price action and volume, fantastic. Bread and butter right there. But you got to have some sort of other item on your charts to give you guys that 3 reasons why to get into the trade. Okay, we want to get in, we want to start noticing the trends, we're following the trend. When we start to see consolidation where it's trying to decide if it's going up or down, we want to consider at least securing profits when profits are made. Now with that said, guys, that's basically the entrance and the exit points. If you guys have any questions real quick, I can answer a few questions. I want to keep this short. I got about 3 minutes for some questions. Go ahead and raise your digital hand, and there you go, Adi, and I'll go ahead and ask you to unmute and go ahead and ask your question. How's it going, Adi?
Hey, what's going on, Playboy? It's Tyrone. Hi. Yes, sir. Hey, so where's your exit? Is it that green candle right there that's above the 9 moving average?
Well, okay, great question. Where's the exit? That is obviously obviously I can't really trade because this wasn't live. My exit is somewhere between here, and I can't really define where I'm saying it, but me personally, right? Because here's where we got that, so we start to see that tight consolidation, right? Me personally, I'm probably exiting here if I'm watching this, because right here, if we notice, we kind of get close to closing above the 90 EMA. So if I'm following the trends, I'm thinking, oh, we might be starting to reverse and we're closing above the 90 EMA. So this is where probably I'm looking to exit at this level. Obviously, we started jumping a little bit more here, but we closed off even less. But that's where I'm thinking of exiting when I start to notice we spread from the 90 EMA.
Okay. Oh, when you notice a spread, not when the first candle that closes above it, it's a spread. Because that,
yeah, you want
3 more candles back is the first real close above it. The green, that one, yeah.
Yeah.
Wouldn't be there?
Yeah. And that would have been a good one as well to exit on, because we noticed this one was on the 90 EMA. That one was above it, and you had your spread from the 90 EMA. And that would be a fantastic one to exit. Sometimes when you're in the trade, you want to get confirmation of the reversal, especially if you already got a $2 movement. And, we might have waited for this one, but this would not have been wrong to have exited at all, because you are sticking with the consistency. It jumped and closed on the 5-minute above the 90 EMA, showing potential for the reversal. Absolutely.
Okay. Thank you, my brother.
Yeah, no problem. Got any more questions? Raise your digital hand. I'll unmute you. All right, guys. Hey, since we don't have any more questions, I just want to thank you guys for being with us. This was, like I said, a free video, just kind of on an entrance and exit strategy, utilizing a moving average. I want you guys to truly understand that you gotta find strategies that work for you. They trade off your trading personality, and no one else can kind of tell you what your trading personality is. You got to develop that yourself. We can give tools and tidbits and keys for you, but really that's just coming off of experience and based off of your trading and your availability to trade. And like I said, we had that question about here. There's no real right or wrong answer as long as you're making money, guys. The wrong answer is holding when it fully reverses and losing out on potential green when you're in profit. That's what a lot of us investors, when we start out, we stay away. Why we're not profitable consistently is because we think it's going to get more. We get that greed. Oh, if it's down 20%, man, there's no way it's not going to go down 25%. Man, I'm just going to wait. And then it reverses because we don't know what to look for. We're not watching moving averages. We're not watching price action. It reverses, and then we panic sell, and we're out of money. So I just want you guys to be informed. Do some research on some moving averages. Find something that works for you. And you guys can always hit me up via DM in the chat groups, and you guys can send emails to traderswarroom@gmail.com. And you guys can check out the website and send a message there as well at traderswarroom.com, and we'll get you guys squared away. With that said, we got one chat. Exit for gold. All right, we'll look at gold from iPhone. We'll look at GLD since we got a question, and we'll go ahead and get out of here. All right. So here we go. Remember, bird's eye view on gold, right? This is the spider. This is gold shares. This is an ETF. First off, I just want to say that I really don't trade this particular ETF. And not because I don't like it. I just don't understand it. This is not one I pay attention to very much. However, if we're in this trade, which I'm assuming the question from the user is, from the iPhone user right there, if we're in this trade, we're probably expecting a little bit of a downtrend. We're starting to separate from our 9 EMA. Remember, we're close here. Here's where we started the separation, and we ended up closing to the downside, and we closed at the bottom of our price action. So typically when you see this, we'll have a little jump because we didn't close at the very tippy tip bottom. We'll have a little jump, but probably still trending down, and we have levels that we've reached before that we can, foreseeably see 179, 178, something like that. So if you're in a put for this particular thing, and hopefully you got in your put up here, you want to exit because you're definitely in money right now and you're making money. The longer you wait, the more theta is going to kick in towards expiration, the less implied volatility works in your favor, and the less intrinsic versus extrinsic value you're going to have in your stock until you're actually in the money. So completely bipolar, absolutely. All right, guys. Hey, listen, I'm gonna let you guys get back to your Saturday. We're gonna put this video on YouTube, and you guys can watch it at your leisure and use it as a tool for reference. And hopefully the other people that didn't join and want to see this will get some value and some worth out of it. I want to appreciate you guys for joining us on the weekend. Enjoy your weekend, enjoy Saturday, do something fun other than some stocks. And as always, you want to rock with us and follow me, let's go to war together.